Happy Friday. Hopefully everyone is doing awesome and wonderful. Today, I am wearing a golf polo and, well, I actually would love to be on the golf course this afternoon, but there is a problem. It is massively raining, thunderstorm. About a little over 2 hours ago, as I was walking my dog, I thought I was going to blow away. Oh yeah, I would not be making this video right now. Oh, it's pretty bad. Hopefully everyone is staying safe and the weather is definitely not terrible for you. It is 0944 a.m. Eastern Standard Time here. The market is officially open. 15 minutes after open now. We see quite a bit of green here on all these stocks that we're tracking, plus my stocks that I am long currently. Okay, so want to cover a lot of things in this video. If you find value in these videos, definitely smash the like button, completely free. Subscribe for future content. Turn on the notification bell. Gonna try and make videos Monday through Friday, Monday through Saturday. Saturday is gonna be a wide range of content. I might start doing some guide videos on Saturdays, along with just really talking about some history overall and pretty much a lot of things that I have learned in the last several years. Been in the market now since April of 2020 with the Rona crash is when I got in. Haven't been around, of course, as like a lot of other people, but I have survived the 2002, in my personal opinion, rolling recession. I really feel that next year is going to be coming out of a recessionary period. And I personally believe that we're going to be witnessing a 90s, the soaring 90s is going to be like the soaring like mid late 2000s, 2026, 27, 28, maybe even 29. A lot of people are saying, well, we've rallied for the last 3 years. Let's go ahead and, you can't be going that, okay? During the 90s, the market produced a obsessive amount of returns. A lot of people forget this. A lot of young investors, when I say young investors, I'm not talking about like your age. I'm talking about how long you've basically been in the market and seen some stuff. I'm 37. To be honest, I wish I got into the market when I was 21 back in 2009. I still remember Obama giving a speech about how we are entering into a new secular bull market. We are in that third secular bull market here. The first bull market secular was after the Great Depression, the 40s up until the 70s with the Great Inflation. That ended it. Then the second secular bull market started after the 70s. 2009, the great financial crisis ended that second secular bull market. They tend to last anywhere between 25, 26, 27 years. Go figure. There's a lot of talk about a big, gigantic crash around 2030 or maybe 2035, that time frame. Who really knows if there is? Me personally, I'm going to be positioned and I'm going to be ready. Okay, so we're going to be talking about SoFi, be talking a little bit more about PayPal here, talking about some external factors, what my game plan for next week is, because what happens today could very well carry over on Monday. We got a very early trading week next week. Wall Streeters are probably already on vacation. Everything is basically done by algos at this point. Today could be an early day for a lot of these hedge funds. And, yeah, so during Thanksgiving, a couple weeks ago, we had a pretty decent green week during that shortened period. Monday, Tuesday, Wednesday, Thanksgiving, Black Friday was, I believe, half a trading day. We had a green week. So next week with Christmas Eve, I believe the market's open a little bit. Actually, let me double check here. Oh boy, I got some stuff pulled up here. Good stuff, but I always forget like one thing. I'm a human being. Not to mention, I also drank a lot of alcohol during my 20s. Yeah, my couple of my brain cells are a little fried here. It's the stock market half day on Christmas Eve. I believe we have a half day. Yes, so the stock market half days. Wait a second. No. Thanksgiving. Okay, never mind. So next week is Christmas Thursday. That's off. Okay, the stock market is going to be open for Christmas Eve. Okay, cool. Regardless, we can maintain this green into next week. We're going to be really looking good. But here's the catch. It really depends on this data that we're going to be getting, and we're not going to have data until January. I actually have it pulled up right here. Hold on here. What am I talking about? Here we go. Why are you like that? Okay, here's a better view. So January's data, we're not going to be getting anything again until the 7th, 8th, 9th. This is going to be really big. January 13th, CPI. And then the Federal Reserve, I believe the FOMC, Producer Price Index. So we're going to be flying based on just external factors here. Because here is something that can definitely impact this market significantly. I've talked about this a little bit throughout this week, but I honestly gotta be covering this a little bit more. So today, the Bank of Japan is going to be announcing their interest rate decision. I talked about this in yesterday's video a little bit. Obviously, Japan is in a interest rate hiking environment, and there are a absurd amount of hedge funds that have taken out loans from the Bank of Japan. And the reason why is because when we were going through our interest rate hikes during 2022, Japan was experiencing the opposite. So what Japan was doing was essentially lowering interest rates, and a lot of people were taking out loans from Japan to funnel into the stock market, because that's what the stock market does, is that it needs money funneling on in to stay high. So today, after hours, if something really negative happens, I mean, if the Bank of Japan comes out and pulls a fast one, where we are expecting maybe a 50 basis point increase, although it's might be projected that they may do a 0.75% hike. But if they come out and say, hey, we're going to go up by a full basis point, that could definitely affect our market overall here in the U.S. So this is something definitely to take into consideration. A friend of mine that watches these videos, a real life friend, I actually mentioned him yesterday. He actually hit me up afterwards, watching the video. He is a very, very, like, marrying the market human being. And once again, it's all about what your trading strategy is and what your long-term strategy is too. My friend's long-term strategy is to buy indexes, to get into dividend stocks, and to basically just build wealth based around his career that he's currently in. And he does have a very, very decent job. So it's that ideology. Mine is a little bit more so opposite in a way. I'm looking to really beat the S&P 500 year over year and to primarily grow wealth in the stock market. You can do either way. But my friend and me were talking a lot about this, and I know it's hard to understand that a different country can actually impact the U.S. stock market with their interest rates, but it definitely can. Because when you have a bunch of Wall Streeters that are taking out loans from Japan to take... I'm not a hedge fund manager, but hypothetically, if I was a hedge fund manager and I need money to buy US stocks, there's higher interest rates in America, but there's low interest rates in Japan. I'm going to take out a loan from Japan and I'm just going to spend money to make money here in America. So keep the number simple. I take out 50 grand from the Bank Japan or from Japan in general, a financial institution in Japan. I take that 50,000, I put into the US stock market. I then make 100,000 and I repay my loan off in Japan, and then I take out another loan from Japan, and then I funnel it back into the market. But here's the catch. Let's say Japan is offering a 5% interest rate on a small loan. A bank in America is offering 7.5. Obviously, the time it takes for me to double my money, I'm going to have to be paying that interest. So therefore, especially if I'm doing risky investments, which a lot of these Wall Streeters do, they do very risky investments. Maybe they're doing a lot of just anything. Like people look at Wall Streeters and people say like they don't take financial. That's bullshit. Okay, believe there are so many. It's how many hedge fund managers have gone bankrupt? Like over since the U.S. stock market has been around, tons. You may just not hear about it that often, but it happens. Okay, they're no different from me and you. So it's a little remarkable to believe that this can affect the U.S. stock market, but it definitely can. So this is something that we really got to factor in. If we see a sell-off in the after hours, more than likely it's because of this, and that sell-off could carry into next week. Okay, I do want to hit on PayPal a little bit because I was talking about them yesterday, and I did open PayPal for a in this account challenge that I'm doing, my Bung profile, aka public profile. PayPal. So I talked a little bit about their earnings. I'm on PayPal's investors relations site. So you can literally find every single thing on here regarding their earnings, regarding their guidance, regarding their revenue, regarding you can listen to their conference call, quarterly calls, and we're in a time where AI is greatly used significantly. Use AI to your advantage, especially if you're getting newly into this market. And you can literally just ask it like Google. It's AI, just basic questions. How many past quarters has PayPal triple B on earnings? Yesterday, I pretty much said that PayPal in the last year has triple beat. I wasn't 100% sure, but I was pulling up a lot of their financial statements on here. It does take time to actually go ahead and do this. Like to do your own due diligence, it takes time. But also understand that Google AI, let alone Gemini, in my opinion, is a little better, I believe, than ChatGPT. Use it to your advantage. Obviously, using AI to predict the future, it's definitely not like the best because I can go ahead and type into AI like, hey, what is PayPal going to, AI will say, well, based on the past year's performance, AI is going to be PayPal is going to be terrible. Well, that's more than likely not going to be the case here because AI is more than likely not going to be taking into consideration what we do as human beings, and that's variables. Variables that we can definitely see in the future. The whole purpose of AI is not to replace humans, but to use it as a tool. And you can definitely use AI as a tool. Did PayPal triple beat Q3? No, they did not triple beat. So in the last year, PayPal has triple beat. I have actually opened a new position here, which was PayPal. I talked about this yesterday, ended up showing it as well. And I personally believe with this monetary easing, okay, the Federal Reserve is going to be doing QE, quantitative easing. that means that they're going to be printing more money. Actually, they're already starting to print more money. Powell last week said, hey, we need to print, I believe he said $40 billion to cover banks. For anyone that doesn't know what that means, banks, when you actually understand what a bank is, it is such a corrupt system. You have $1,000. You deposit it into your bank. Your bank can lend out 90% of that capital to make money. Yeah. So the $1,000 that you see in your bank account, only 1% is actually, only 10%, $100 is actually there. It's utterly crazy. I'm not an economics major, but I've studied this significantly, marketing major, a little bit of the opposite, but it's a little sickening when you think about how quickly and easily our banking system can crash if everyone pulls out cash, because it's all artificial fake money. The money that you see in your bank account, it's really not there. It's lent out to make money. So the Federal Reserve is printing money right now because people are going to be taking out money to pay their taxes. So the Federal Reserve is the top banana of banks here in America. And they obviously bail out other banks, and they see, well, okay, we need to create more money. And the Federal Reserve literally just puts it in on their computer, and boom, just more money is magically printed. It's our entire system is demonic and satanic. It's unbelievable. It really is. Sorry if that bursts your bubble if you're new to the stock market and also to the banking system as well, but it's a very demonic environment. So, with that being said, I just opened up a position here into PayPal. We'll get to SoFi momentarily, but I mean, PayPal is below all the moving averages. They just started issuing dividends. Did PayPal just come out with 1% after Morley downgrade? Yeah, fuck you, Morley. It's a bank downgraded PayPal when PayPal said they're going to apply to become a bank. Isn't that ironic? A bank, Bank of America constantly downgrades SoFi. SoFi is a bank. You got a bigger bank downgrading a smaller bank. Like, dude, you want to talk about corruption? Like it is so... Okay, so I bought into PayPal. I feel confident. Second time owning PayPal shares here. I owned PayPal right before the election of last year. I walked away with, I believe, a little bit above a 15% profit. Nothing too crazy. Obviously, I have a smaller position right now than I did when I bought into PayPal last year. But then again, on my my Bung profile here, my public profile challenge that I'm doing, obviously we have a smaller position. Or rather, I got a smaller account to play with. 2 days ago, this account was below, almost below 35K here. And we're just rebounding very nicely. Up 2%, solid amount right now, recovering a lot of green. PayPal, I'm down, totally okay. If I do deposit more money into this account before the account challenge starts, going to be starting in January officially. It's going to be a fun time. So hopefully you all definitely stick around for the next year. And like I said, if you are a daily viewer, please subscribe, totally free. Hopefully we can get to 100 subscribers, definitely before this account challenge starts. And keep growing this channel as well. Not my first time making YouTube videos and being on YouTube as well. So definitely very fluent in this genre. But okay, so SoFi. Let's talk about SoFi a little bit here to kind of really wrap up this video. SoFi is gonna really just... It's going to be trading with the market. Yes, I am looking at AMD here right now, 5% up on the day. We're getting a solid amount of recoveries. And it's a lot of fear seems to be significantly potentially leaving this market. And when the market goes, one thing that I have learned, when the market goes from red to green, red to green, red to green, it's fear. It is all just absolute just fear. Like, look at this. This right here is just, it's just fear. Okay? A big push down, a push up, another push down, slowly trending up. It's essentially fear. It's in the last like week with the Federal Reserve rate cut decision, with the data that we got this week where Powell said don't trust the data. Okay, Powell. Well, the employment came in hot. It came in high as 4.6. So we're not supposed to trust the unemployment data? That makes me a little uncomfortable, but it does make sense because the government shutdown probably gave some people the layoffs. Okay, CPI came in super lower than what it was supposed to. So you're saying inflation is like higher? A lot of people are, we're not going to have a solid grasp until January's data. And this is where, for a technical analysis basis on SoFi, it's ultimately bullish. Let the moving averages reset. Once we blast through all-time highs, there is nothing stopping us from really getting to this $45, which is Anthony Noto's stock compensation package. So once we get through this breakout that we are currently in right now, pretty much 25 up into like $32 range, we're just going to be stagnated. And when this does happen, it's going to be very quick and very powerful. And a lot of people understand this, and a lot of people are preparing. We tend to see a rally on SoFi like a good like couple weeks before their earnings. So we theoretically could rally maybe to all-time highs. We pretty much saw that like a couple weeks before their earnings back in October. We essentially did rally to all-time highs, and then we sold off, and then we pushed higher, and it just happens. That's what SoFi does. But SoFi is on a great trajectory, which is phenomenal. AMD, very big AMD bull. Stock dropped 11%. Big tech. I gotta look more into this, but I mean, Nvidia right now is making a solid recovery, so it looks like overall the market here is just kind of really propelling higher. It's this kind of really, this kind, and this is something that I've said in the past couple videos as well too. The major indexes, this may be it, guys. We may very well just rally, maybe this buy the dip opportunity is really over. So this could have been like the 2018 style like crash, because 2018 we had a very bad beginning of the year, and 2018 no it was the opposite. This year we had a very bad beginning of the year. 2018 you had a buy the dip opportunity early in the year, and then at the end of the year it was a full-blown crash. So this year we had a crash. We may just have buy the dip opportunity small. This is obviously a pullback. Could be another buy the dip opportunity. I've been buying some stock in the last week here. And this may just be a full trend higher now. It's pretty crazy how permabulls like Tom Lee are calling for $800 next year on SPY. That is, by the to get to $800 at the end of next year, that is, whoo, that is that's a big bold call. That means SPY is going to go up by nearly 20%. That's massive. Very massive. So who knows what may happen. I don't really like to put price predictions out there, especially for like major indexes because anything can happen. And you can also have a major index not go up by 20%, but your profile could go up by 200%, 400%. Oh, yeah. A major index does not have to go up to make your profile go up. So I really just want to wrap up this video by saying I'll be tomorrow's video, I'll recap of what the Bank of Japan does. I'll be talking about pretty much what SoFi did for the remainder of today, and talk a little bit about maybe my game plan a little more intensively next week. I may be depositing a little bit more money into this account to pick up some more shares that I'm going to be buying, especially if there's weakness at the start of next week. If we get slapped on the wrist because of the Bank of Japan next week, maybe this is going to be the final push down before, like, this market starts turning around. Or maybe we're just going to have a nasty 2026. Who really knows? But as long as you are invested into great companies with great management team, you really can't go wrong. All right, guys. Like I said, if you enjoyed this video, definitely smash the like button, thumbs up this video. I'll catch you tomorrow on a new one, and later.